Hey guys, Mark with Think Insurance, helping you save time and money on your current insurance policy. We're going through this series of a dwelling policy, a home policy. If you haven't started at the beginning, I would recommend you go to the link below where I'm going to link the very first video. We're going to go through coverage A, B, C, D, E, and F, as well as endorsements and recommendations. So go ahead and start there if you haven't, but let's dive into coverage D. This is loss of use. A lot of people on a policy, if you have a claim, don't realize that the insurance has mixed in that if they have to move you out of the house. Let's say, for example, the kitchen caught fire and they're going to repair it, but it's going to take 3 months. Well, you don't have a functioning kitchen. You could technically live in the house still and have it repaired, but it's going to make sense and it's going to be a lot easier for you to move into a hotel or move into another house that you can rent and pay those expenses, have a fridge, have everything functional, and you're not as distracted or uprooted to the point where it's affecting your daily lifestyle. Well, the insurance is going to pay a portion of that. Typically on an insurance policy, coverage D is going to give you 30% of coverage A, which is the dwelling. In our scenario, we used $180,000 for the replacement cost of our home. Well, if that's the case, then we have $54,000 towards additional living expenses. It's not just renting a building, it's also if you can't get back to the house. Now I got to pay someone to mow the lawn. I've got to pay someone to maintain it. Maybe it's in a high security zone and I have to pay some fees for that. There's additional costs that you're going to incur. Initially, because you had that claim, you're probably going to spend the first 3 to 5 days in a hotel before you figure everything out. Well, they're going to pay for food because you don't have access to a fridge. They're going to pay for the living expenses, additional gas if you're driving further to work. Any additional income that you've lost because of this claim is going to file under that coverage D, the loss of use. I have had a couple scenarios where I worked with some people and they ended up getting a mobile home set on the property because they just wanted to be near the home as it was being fixed. They wanted to make sure that it was secure and no one was going to just walk in and take their personal items. And so that was part of it. They will pay to an extent that makes sense to get the right fit for what you think is going to be good for your family. Now, other policies don't necessarily do 30%. You may see actual loss sustained, which is no limit. There's not really a major benefit to having this coverage unless you have a really, really high-end home. So if you have the $750,000 or above home, then sure, that's a great coverage to have because now you're not worried about if you're going to max that out. But take this into consideration. Let's say that it costs you $5,000 a month to live outside of your house. That's the food, the gas, the paying someone to mow the lawn, and let's say $2,000 a month for renting a new dwelling. If you did $5,000 a month, it would take you more than 10 months to exhaust or come close to exhausting that total policy coverage. Most cases, your home is going to be fixed and done and ready to go within a month, maybe 2 months. If it goes beyond 6 months, there's probably something going on there. That way you guys get an idea of how that mixes in. Having actual loss sustained is a great benefit. It's nice to kind of say that I have it, but it doesn't necessarily give you that extra huge benefit that you would want out of a policy. If you guys have the actual loss sustained, I wouldn't worry about it. It's not necessarily something that's costing you more money. It's typically something they just mix into that price. I would imagine if it is an extra cost, you're probably talking a couple dollars a year to have that additional piece. So up next, we are going to talk about personal liability, which is coverage F, one of the most important and the largest reason that your home insurance changes. Let's dive right into it. Go ahead and click the video here and let's get started.